Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield, and what a week this day has been. As we do this on a Friday afternoon, it has been probably not the way we wanted to end a week, but it was building up throughout this trading week, and maybe some of the signs were there that we just didn't really take full notice to. Well, we're going to do a breakdown of what happened in this week's market trade, so stick around.
Meet the champions of innovation in the heart of Nebraska. They're not just farmers, and they nurture more than just crops, pushing boundaries and turning challenges into opportunities. They trade knowledge and know-how, and their dedication doesn't end at harvest. It's in your every bite and every drive. The future of food, fuel, and fiber, and the future of Nebraska starts right here.
And welcome back once again, as we have the opportunity to speak with Shawn Hackett with Hackett Financial Advisors and Kyle Bumsted as well. And gentlemen, I kind of joked about what a week a Friday market trade had been, and we're going to go more in depth, but let's look before Friday. Shawn, I'm going to start with you. Kind of what was your biggest nugget that you saw in this market trade leading up to the Friday trade action?
Well, I mean, the market started to turn up. We started to see short covering. The dollar had been weak for several weeks. We started to get some yield numbers coming from private estimates that were down from a month ago. And you started getting some, like I said, you started getting some short covering at a time of the year that you usually do. So I think that, that's a positive sign. But remember, we haven't even really started harvesting the crop yet. There's still a lot of corn that has to be digested. It's going to be 2 steps forward, 1 step back for a while, even though the lows may be in place. I think we have to be realistic about what we can expect here to the upside. I don't think we're going into a ripping up bull market, for right now. I think let's be thankful that maybe we're stopped. We're not going down for right now. Let's just that's over, and we can constructively build a base from here.
All right. Sounds good. Kyle, what about for you? What was your takeaway?
I'd have to say I'd have to go along with Shawn there. We did see some nice short covering and whatnot, but we did short term get overheated on these greens a little bit. There's still a pretty decent amount of carry out there in that East to March corn spread, so I'm looking at that. And as Shawn said, we've barely gotten started on harvest, and there's a harvest going on right now. It's a tin can harvest. Everybody's emptying their bins to get ready for the harvest you're going to be bringing in here in the next 60 to 90 days. So we've got that to deal with. On the soybeans there, same kind of situation. I'm watching the carry. We're just kind of flirting. We're at neutral carry right now, but we just kind of seem to keep moving that bean carry out there a little bit more bearish. It just by a quarter tick, by quarter tick, by quarter tick every day, it seems like we keep widening that out a little bit. So that's something I'm watching there. Basis is kind of falling apart here on soybeans, but has firmed up here in corn as of the last couple of days.
So then I'm going to ask both of you as well. And Kyle, since you brought up the cleaning out of the bins, last couple of days, we've kind of seen a data dump from different companies sharing what their thoughts are on what those BPAs could be.
Yeah, it's data. I mean, I don't really think it moves the market at all. If it did, you'd see a massive move in the spreads. And I think some operations confirm that, yeah, farmers are thinking there's a big crop, and there's other surveys that were out there thinking, yeah, it's probably not near as big a crop. But, the thing about government reports and surveys and whatnot is you can always go back and that data can be changed, or they can adjust that data at a later date. We can't adjust what the chart printed today on today's close.
All right. What do you think, Shawn?
Yeah, I mean, no one can say that any estimate is wrong until the combines roll and confirm or deny whatever has been said. So at some point, it's the combines that determine what's really going on. No matter what the situation is, we have a solid large crop, whether it's a bushel to the acre one way or the other. I don't think right now that's really that big of a deal. I think most importantly, from what I see, as long as it's not significantly different from what we think the range is, I think we're going to very quickly shift to what is going on down in South America with the starting off of the Brazilian growing season and some of the driest subsoil moisture we've seen at this time of the year ever seen. And obviously we want to keep our eyes on those export demand numbers, which have been somewhat of a bright spot that we want to continue to see happen so we can move some of this grain and take some of this oversupply out of the equation, and we can lock the rest of it in the bin for a while.
Shawn, you talk about Brazil and the dryness that they're dealing with, and the river level waters are a big concern right now, not only in Brazil, but on the Mississippi here in the States as well. So it's kind of a double sword going on there for the grain complex.
Yeah, every time we get to this time of the year, it seems like for the last 4 or 5 years, we just can't seem to keep the river levels going anymore. It's just unbelievable. Even with a year that we had good moisture, it's been a very dry finish, specifically in Brazil. Susan, this past 12 months has been the driest year they've had going back 150 years of moisture data. Their precipitation in North Brazil is down 50% over the last 10 years. We think a lot of it has to do with the deforestation of the Amazon and rupturing the Amazon monsoonal flow. But needless to say, we've really never started the growing season off quite like this. Watch mid-October. If those acres are delayed in getting planted on soybeans, it could be a chain reaction for maybe bringing some more optimism into the grain markets than we currently have.
All right, the elephant's been sitting in the room, and I think we better address it. And Kyle, I mentioned at the beginning, this was the longest week of a Friday trade in quite some time. And there was a lot of struggles, I think, when you looked at this market today.
There were. It was all commodities. It wasn't just equities. All the commodities kind of got some spillover here from it. I mean, cattle took a big hit today. They really tried out of the gate to trade higher, but just couldn't quite get it done. So I'm a little concerned personally, both this feeder and this live cattle complex. We can go and push new lows here for the move. If we take out last week's lows, obviously that's what's going to be coming is new lows. So that's what I'm really concerned about. What concerns me is how we traded on Thursday. We did trade lower, but open interest did build on that down day, and volume was not huge, but volume was okay. So I'm concerned that there's new sellers in both the feeders and the live cattle complex, and I'm afraid that today on Friday it could just back that up a little bit more. And I'm glad that this week is over. It was a holiday shortened week, and some of that could be the case as far as volume and liquidity and things like that. But I have to take notice and to take action when you saw open interest go up on a big down day yesterday, like we did in the cattle.
So do you think the long-term downtrend is going to be in place for a while for these cattle?
Yes, I do. I think that at the end of July, I'm very firm in that. When I look at the end of July here, it appeared that the cash feeder cattle index did put in somewhat of a reversal pattern there at the end of July, and the month of August confirmed it, and we're still building off that here, and we're still working lower. Now, cash feeders have firmed up the last couple days, but we've got a lot of ground to cover here from those 270 and change highs that we made here in some of these contracts almost a year ago. So I don't see new highs, and we're what, $35 to $40 off the highs in some of these contracts, and that's a lot of ground to cover up here before the end of the year.
Oh, very much so. Shawn, we also had the jobs data come out, and many said they were surprised by what those numbers had to say. As you look at the numbers and the tie back that we see to agriculture,
where we are in the cycle is we are in a consumer recession. I don't care what the numbers say they are or not. We're in a consumer recession. The Fed's going to start lowering rates. We know when we get to this part of the cycle, consumer demand will be weakening for at least the next 3 to 6 months. And any commodity or any supply that is cyclically sensitive, especially things like dairy, things like beef, are going to take it on the chin. Today was a great example. The stock market didn't like the jobs numbers showed and continued economic weakness on jobs front. And so the stock market got hit. All commodities got hit. It's an economic part of the cycle where nobody wins and everybody loses. And you would just have to look at it that way, that we're in a retrenchment mode. Yes, the Fed lowering rates eventually will turn the tide. It always does, but there's a significant lag, and we're just starting that process. So overall, the commodity cycle is where, in terms of where we're at, crude oil breaking the 70 level, it's going to be a tough road ahead into the end of the year. And I feel any market that you are sitting, that you can look at and say, I can, turn a profit or cover my expenses, or I can protect myself to the downside. I think I would be looking to have a bird in the hand versus two in the bush into the end of the year. I think that's the right way to manage risk on the farm right now.
Indecisiveness of the dollar as well today. It couldn't figure out which side of the fence it wanted to be on.
Well, the dollar has been weak. It tried to bounce today, but actually on a day that the stock market was off a lot, usually the dollar would be stronger than this. the dollar to me is in a lot of trouble. That's ultimately a positive for commodities, but it's not a positive in the early part of the cycle, Susan. You got to get through that first 3 to 6 months before a weaker dollar starts turning the tide on the commodity cycle. And I think everybody thinks there's this instantaneous thing. The minute you do something, it turns the tide around. It doesn't work that way. And so I'm really worried. That's why I'm saying I'm really worried about the next 3 months to 6 months about what we're looking at from a demand side perspective, despite the fact that some of these other factors are looking more favorable as a longer term tailwind.
And Kyle, Shawn just talked about this, the whole dollar and the whole workings it has. How do you see that ties back, not only the dollar, but the jobs numbers and tying it back specifically to this cattle complex?
That's a good question. A cheaper dollar should be helping our export situation. Maybe it will, maybe it won't. We haven't seen a big holiday export program kick in yet. It's not the right time of year for that. But it does concern me with those jobs numbers today and people eating choice beef. It doesn't add up. A lot of consumers, I think the box is probably going to have to get under the choice is probably going to have to go up to under 300 to get some of that demand back here at the meat counter. So that's a little bit of a concern. That's what I'm watching too is, where's that equilibrium where the consumer says, okay, I'll put the chicken and the pork back and I'll buy some beef this week and, we can afford it. But with the holidays coming on, colder weather is going to be setting in here. You're going to have some utility bills coming in. They're going to be seeing some utility bills here from this recent heat that we had come through here. So that's going to start to put some questions in the consumer's mind. Do we heat the house or do we eat good? And I know the consumers like to eat good. I like to eat good. Everybody likes to eat good, but it does come down to the checkbook at the end of the day.
So, Shawn, as we get ready to wrap this up, I want to ask both of you one more quick question for you. Do we see that the dairy hit that $23 mark and hold there? Or are we just going to be on the fringe for a while?
I really, really struggle to see how dairy is going to really have material upside from where we recently were. I know we had the last couple of days, we did see a significant setback. I just don't see demand being able to chase these prices. Feed relative to the milk price, that ratio is just phenomenal right now. I mean, the dairyman is getting a very good deal into the end of the year. We already saw the last time we had a yen carry trade correction in markets, the milk market got hit very, very hard. I struggle to think that we're going to be able to have demand come in and power ahead through the very negative demand side of the equation into the end of the year. I'm much more optimistic later on in 25. Right now, lock in the price, take the money home. Don't be foolish here. You have some very good prices historically relative to feed prices.
And finally, speaking of feed prices, Kyle, I wanted to ask you, as our cattle guys watch this grain market, what is their thoughts running into the rest of September, into the fall months?
That's a good question. Keep an eye on the basis, but I'm also looking at some stuff out there in that in the distance out there. That May to July corn spread is pretty tight. There's not a lot of carry out there, so you might be wanting to look at some, since the option volatility has been cheap. It might be something to lock in some feed needs for the later part of spring, early part of next summer, because you're talking about 6 3/4 cents carry from May to July. That's not a lot of carry in the market. So there is some concern, as Shawn talked about earlier, some dryness maybe in South America, because that's when South America's crop is going to be coming to town. And that's what we kind of need to be watching out there as we're sitting here in the combine this fall, or if you're looking at those longer term feed needs.
All right. Well, gentlemen, I appreciate both of you joining us. We wish you a wonderful weekend. A quick reminder to everybody that commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's been this week's Nebraska Soybean Board Weekly Market Roundup.